All right, another month has flown by, so it's time to have a look at my Freetrade UK dividend portfolio, which is made up of UK FTSE 100 listed stocks, which are in a broad variety of categories, with the whole purpose of building a really nice dividend reinvestment portfolio. Last month, we were at around £2,340 if I'm just checking on my last video here. So let's have a look and see where we are. I think you'll all agree it's been a pretty crazy month. So much has happened. I can't believe how much has happened in the stock markets. And unfortunately, it's been going in the wrong direction. Let me just have a look quickly broadly of how the FTSE 100 has been holding up against the S&P 500. Have a look now on this chart. So the FTSE 100 is currently down 5.6% for the month, but the S&P 500 is down even more, over 10%. If we zoom out just year to date, you can see the FTSE 100 is only down 6.5%. I say only, which is quite funny to even say those words, but the S&P 500 is down 23%, which if you've been a regular viewer of this channel and others, you'll know that the S&P is well into bear market territory, unfortunately, at the moment. Okay, so let's get into the performance figures of the portfolio first. I'm going to go into the Insights tab here, just to give us a flavor of how we're actually doing, and I'll expand that out to the maximum length of time to give us the money weighted rate of return, and also give us that time weighted rate of return too. So we can see we're at 50% in the money weighted time rate of return. And if we scroll down here, I think this is probably the most important benchmark, at least for me personally, to watch and look at to see how we're doing against VWRL, which is that global portfolio, that global ETF. That gives us a good idea of how we're performing. And thankfully, we are up 36.58%. So now I don't know about you, but I would pretty much take that all day long if I could invest all of the rest of my money, retrospectively, of course, into this portfolio. It would be pretty nice. Maybe the FTSE 100 is having a bit of a resurgence, but who knows? Anyway, first things first, let's talk about dividends, because actually now that the portfolio's kind of got started and kind of snowballing itself and actually moving along, we do get paid dividends, which is quite nice. Last month, if you remember, we had quite a nice bumper set of dividends. I think there were 4 or 5 in there, and a special one as well from Rio Tinto. Now we just have a couple. So we've got Legal and General paying £12.87. Let me just go on that one for you now. And then also Unilever kindly dropping us a whopping £1.43. So I can probably go to the ice cream van the next time it comes around. Anyway, and then on to just buys of what I did with that money and a few different free shares that came in. I did a couple of things. So let's have a look here. I did a buy of GSK at £17.20, and then also I bought some more Vodafone. Again, I just buy the Vodafone ones because I've had spare money in the account. The share price is so cheap that I just keep putting it into it. But actually, the company's done pretty well. And just quickly going back to the GSK investment, remember that GSK are doing a demerger. So a company called Haleon is basically going to emerge, taking their entire healthcare business. And this will actually be listed on the FTSE 100 itself. That is taking place next month, if I'm correct. And I'll put that up on screen now for you. I know we did discuss that on the last portfolio update, and that will looking to be a lot more closer next month and actually happen. So I think it'll be a fairly good thing for the company. I think kind of investors would prefer a company not to diversify in so many different kinds of businesses in different sectors, and actually they'd rather you just be really, really good at doing one thing and then just kind of going down that route. And I think potentially that's an issue that Unilever has had in the past, but we can touch on that one later. All right, let's take a time to just go through the different winners and losers in the portfolio. I'm not going to go through every single one because that is boring and that is not what we do on this channel. A couple that stood out to me, certainly for the last month or so, and in this strange environment we find ourselves in with high inflation and potentially very low growth. So let's firstly have a look at Tesco, called Britain's biggest supermarket in terms of revenue and market share. So what will be interesting in this area, even though inflation's going higher, and of course potentially we might be looming into some kind of recession, who knows, I'm not going to be a doom and gloom merchant though. It'll be interesting to see how Tesco does in the grocery sector because, of course, as you know, regardless of the economic climate, you are going to need to eat and go and get some food. So in their trading update and their Q1 results, which they just announced quite recently, a couple of interesting things. Like-for-like sales were actually down in the UK by 1.5%, but they were boosted overall by Booker. If you know Booker, they're kind of a wholesaler, which Tesco acquired recently. And a couple of things which Ken Murphy, the chief exec, noted were a couple of things of pretty much saying that shoppers were trading down to the lower cost brand, which is quite interesting. And also he, of course, was pushing his Aldi price match stuff, which I definitely take benefit of when I go to my local Tesco. I don't know if you guys also shop there as well, but there's a huge amount of battle now from those low cost supermarkets, and the big ones are trying to price match them as a way to entice customers back in. So long term will be an interesting one. Just a refresher on Tesco, it's got about 4.37% dividend yield at the moment. And if we just look at the wider chart, of course, it's gone up 50% over the maximum 5-year period that we can see on the Freetrade app. It's never going to be something that's going to go to the moon or 10x or anything like that, but you would expect kind of a slow and steady grower in this sector. So jumping into HSBC now, no surprise really since the start of the year, this stock has kind of made a little bit more of a move and recently just gone up slightly more in favour as the Federal Reserve and certainly the Bank of England has just raised interest rates by 25 basis points. So in the UK, we're now 1.25% where we were at just a 1%. We're still pretty low. I don't know about you guys, but I don't think we're going to tackle a nearly 11% predicted inflation come autumn with those very, very low rates. So I do think we need to probably move a little bit faster with them. Certainly in the US, they certainly need to move pretty fast as well too. And why would HSBC go up in higher interest rates? Well, in that environment with the higher interest rates, of course, banks can make a lot more profit. And of course, HSBC have already jumped the gun, as you'll see on screen now, actually raising their mortgage rates, their variable rate mortgages by 50 basis points. So that's a doubling of the 25 basis point jump that we see from the Bank of England base rate. So it means basically if you've got kind of 100 grand with the bank on your mortgage at the moment, you're looking at what, about £500 a year extra, so about 40 quid a month. So that's for every 100k. So for those of you out there with maybe 200 or 300k on the mortgage on a variable rate, unfortunately, you're going to be paying a lot more on your mortgage. If you're like me and you managed to fix yourself for 5 years just a couple of years ago, then you're okay, but that's life, I'm afraid. Let's have a brief look at some of the other stocks that we did cover in the last portfolio update. So Aviva effectively returned money back to shareholders, which is quite nice, almost like an extra special dividend, if you like, but that's pretty much just returning capital back to shareholders. Now, there is more talk of potentially having more money back to shareholders because they do seem to be doing better than they had expected, and they don't need to hold that much capital on their books. And there's only so much you can do really as an insurance company to kind of grow as a company. So it'd be nice to get that money back to shareholders. Either way, they seem to be growing well, and that will be another long-term hold. Unilever, this is a stock which I covered in my Hargreaves Lansdown portfolio update. So if you do like my portfolio updates, don't forget to go to my latest one on the Hargreaves Lansdown account. That's where I've got a bit more UK stocks, but also a good amount of US as well. Got a good chunk of Unilever in there into that one. Now, this stock's been an interesting one because it did see a big jump as Nelson Peltz has joined the board, who's a bit more of an activist investor. Of course, I think, again, like I mentioned before with GSK, there's certainly an expectation that he will probably try to divide the business up a little bit into its different parts, whether it be more of the consumer focused or toward healthcare and different sectors of the business, for example. Of course, as you know, Unilever's got so many different brands, it may be better if each of the sections kind of goes out and does its own thing rather than trying to be kind of good at everything, if you like, because the share price hasn't really done a huge amount. If anything, it's gone in the wrong direction, and we've just had a huge bull market. At least it might be coming to an end now, but over the past couple of years, it's been pretty good. And unfortunately, Unilever hasn't really benefited much from that. And then jumping over to a completely different section, you'll see one here which is doing pretty well. Good old Vodafone. If I just jump into this one now, you'll see it's got a very healthy 6% dividend yield at the moment. And I do regularly buy this one if I do have spare money in the account from free shares or anything like that. It's had a very healthy move over the past month. You can see it's up over 7%, which is quite nice. I think there, of course, there's lots of moving parts within Vodafone. There's lots of different things which, if you ever just follow it on the news, there's so many things going on. One random news story that I just saw, one recent one, saying they've just produced and just put in a self-powered 4G mast out in Pembrokeshire. So pretty good if you're a farmer out there, if you're someone with some pretty terrible broadband. Because I don't know about you, but if I ever move from this house in Manchester, because I've got Virgin Media broadband downstairs, it gets like 600 megasecond, I could not now move to any other house which had poor broadband or poor connectivity. If you're ever looking on Rightmove, I don't know about you, but even if you're just looking at houses which you can't afford, I definitely go straight down to that broadband section and find out what the speeds would be. And even if it's a lovely mansion in the countryside, the first thing I think of is, I couldn't live there. I need a faster connection. Anyway, that wraps up most of the portfolio. I won't go into any more detail. If I have missed any massive news stories or any movements, please let me know in the comment section below. Or another thing I always ask is if there are any screaming buys at the moment in the market that you think I should add to this portfolio, again, please let me know in the comment section below, and don't forget to leave me a like. I think I have most sectors covered in this portfolio, but if you do see anything missing, let me know. I'm going to be very curious over the next couple of years to see how the FTSE 100 holds up. And I think there are going to be a lot of people out there who are going to be gloating and very, very happy that they're invested in these quite relatively boring dividend stocks compared to some of the hype stocks and the tech stocks, which had a massive run up over the past couple of years. But now, of course, these companies which deliver fantastic cash flows, real money back to investors, are probably going to stand the test of time. Who knows what's going to happen, but we'll keep an eye on it. Anyway, until next month, I will see you in the next portfolio update. Don't forget to leave me a like on the way out, subscribe for many more, and as always, happy investing.